Good morning guys, TGIF. This is the second take I've had to do the video. I installed some software for the microphone, but it just has made it like a terrible audio quality and it kept cutting in and out. So I've got no idea why that's the case, but it's the second take of this video. I'll make it a little bit quicker than the first one, but it's just really to say is that we don't want them to be buying the dips, and they've been buying the dips since Monday. And by them doing that, it's going to impact, well, it is impacting our big picture. So this is how they're currently situated. They're net short, but if they're going to go long, it's going to impact this. And then if we go net positive, net long, then it tells us that the herd are going to be long on risk. And normally, because they are so counter trend and they lose money, when they go bullish on risk, that's normally quite a risk off indication, and whenever this happens we tend to see a big decline on indices, because we have to remember there has to be someone to take the other side of that trade. If there's all the retail traders, they're going long, they're trying to buy the dip on the Dow Jones or DAX, then there has to be someone to counter that trade, and it's an exchange, you see. So they have to be programmed to be bearish. They need to be in this place where they're scared and they're basically selling, and that's like, that would be normal typical behavior from the crowd. They can't be bullish, they have to be in a state of fear, and that's why the news comes into play. And you probably find why there's all this scary stuff going on in the news, because they don't want you to be buying risk, they want you to be selling it, because there has to be someone to take the buy if you're selling it, you know. So if we're buying, they have to sell it, and that's not good. It's not good business for the banks. They need us to be programmed and conditioned to be fearful, and that's where the news comes in. So you've got to be careful. We have come off a bit off the lows. We were at 5 and now we're at 9. Still very, very low, quite scary, quite ominous. So I'll show you the indices now. This is our current robot, but that's fine. And we did okay on our trade yesterday, but I'll talk about the robot at the end. So this is the Dow Jones. They're going long, so you know, we create a box, so we're falling. Hopefully that's clear why it's falling, because they've gone long. So we're going to need to see a flush of this low, and hopefully with any luck they don't try and buy the dip. They need to be out. They need to be flushed out. And it's basically, it's like, I suppose you think of it like a ship, and it needs to offload cargo because it's getting heavy, so it needs to offload some dumb positions, and this dumb money are going long, so they have to get flushed out. Okay, went long, they're going to get punished. Okay, S&P. See, I've already drawn the boxes because this is the second take of the video. So they might sell it on S&P, but we'll have to wait and see. A flush to the low should do it in speech marks, and so that's that. Will be a resistance if we come up. So at 4405, 4421, and what I didn't want is them to be buying. You know, we want them to be selling. They don't want to be buying it. If you've got a long bias on this, you don't want them to be buying, because look what happens. And DAX, they're going long on DAX as well. Look what's happened. Right, so you know, we're gonna probably have to continue to fall because of this. Okay, so we had the heads up on Monday. You know, we had a risk off indication on Monday, and it has really fallen since. So gold, and inevitably we're going to get a break of the diagonal. They have sold it so we can create a box. However, the caveat here is that the US Treasury yields are pumping so much, it's putting a lot of pressure on gold. So if the US Treasury yields calm down today, then it might do okay. We've made a risky buy. We get a technical break, it could be fairly bullish. We've certainly taken a lot of stops out as well, and you know, there was stop hunt. This wick was a stop plus cluster, and there have been some stops down there as well. So maybe look for a long, but for me, I'm just going to wait and see what happens with risk appetite on the broader term, because it's going to impact everything. So if we go risk off, it impacts FX. You know, the foreign exchange market is very sensitive to risk on, risk off, and if the risk appetite continues to sour, we should see a flight to safety in the USD and the yen. So that's that. And then the robot logic, it's basically just saying scroll down, is that what it does, it actively monitors a currency pair when it's at 50%, and then if it goes this way it will trigger, and if it goes this way it will trigger. And what's quite cool is that New Zealand dollar yen was here, it went this way, we got a few buys. Admittedly I was doing some testing, so we shouldn't have had multiple trades, but it worked out fine. They shorted it below, you know, the 50% equilibrium line. We got out of the trading stop, and now if you look at NJ, they're now gone long. So we got out at a good time, and the trading stop is a good idea. So basically it's a scalper equilibrium bot, and it's going to actively monitor these currency pairs when we get to 50%. Now on my first take of the video I was saying be careful with GU, because we're fairly close to the 50%, and if we get to 50% and then it goes to 51%, it will then trigger a sell. So GU could be a little bit ominous today. If we go properly risk off, the dollar's going to strengthen over the pound regardless of the sentiment, because the fundamental flows will flock to the safe haven USD, and then therefore this would make it a sell. So be careful with that one, but I think this is a likely candidate of what will happen is that it gets to 50%, and then it will get here, and then it will continue to go long, and then it will become a sell, and so we'll get GU trigger sell today, I think, but we'll have to wait and see. So it's just going to sit there and monitor, and then once it comes to 51%, then it will get it. If it doesn't, it sits at 50%, we won't get a trade. We might not even get to 50%, so we'll just have to see we go. Hopefully the mic was better now, and it's a little bit louder, hopefully, and I won't be messing around with those settings anymore, because it's quite frustrating having to do second takes of the video. So TGIF, remember to be very careful today, and it's possible we're going to have a risk off Monday, Tuesday, but it all depends on today as well. So I'll be back for the COT data on Sunday, and have a good weekend as well.